Hello and welcome to Your Money, Your Call. I'm Kim Slater. Tonight we're going to discuss the yield story. Many investors are under the misapprehension yields on equities and fixed income are an annuity. So in the panel with me, or on the panel tonight, is Ken Bloomfield from Financial Clarity and Gary Stone from Share Wealth Systems. Gentlemen, it's rather interesting to see what's going on in the market at the moment. The market nemesis, like Captain Nemo's giant squid, is capital risk. We've got yield on one side, capital risk on the other. So are bond similar equities a safe haven, or is the market actually blinkered and paying too high a valuation for equities at the moment and ignoring risk? I mean, it's interesting to see normally valuation methodologies do play a part in determining where the share prices go up and down and what happens to indexes. And look at that ANZ result today, and we'll talk about what that means for Westpac, which is due later this week. Again, is the market like Captain Nemo headed for an epic battle of yield versus capital risk? As we've got all this money crowding into a very few stocks, and that to me is worrisome in itself. So let's get on with it and talk about this yield story, because we have had this immense concentration of funds, and we had Telstra hitting an 8-year high today at $5. It's reaffirmed its earnings. To you, Ken, first of all, do you think it's getting overcooked?
In a word, yes, I think it probably is getting overcooked. I think things can stay overcooked for quite a while in the market, depending on the trend that we're in. And of course, the reason why it's so attractive to people is because investors are very risk averse after a very difficult period in the last 5 years. And of course, interest rates are down at 3%. My feeling is that they'll stay at 3 or even go lower before we're through this cycle. So when you're looking at these companies, if investors are thinking that they can sustain their profits even round about where they are, or just increase them slightly, a 5 to 6 or 5 to 7% after franking credits yield looks very attractive. Right. So it looks good in the short to medium term to me still.
Okay. Gary, we'll come to you in a second. So to you, our viewers out there, if you do have a question about stocks or shares, our phone lines are open on 1300 30 34 35, or if you prefer, you can email us at yourmoney@skynews.com.au. So let's get those phones ringing. Gary, your thoughts. Where do you stand on this yield versus risk, and how much higher is it going to get chased, and are we seeing a bubble?
Yeah, well certainly yields in Australia are on our treasury notes that are high relative to the rest of the world, but are still low relative to historical yields. So the stock market's obviously providing a better opportunity there, and that's why we're seeing this yield play. But also stocks have been going sideways and oversold for quite some time, and we've had this